Hello, and welcome to RegulatoryWrap. The FCA's zero-tolerance policy towards market abuse is clearer than ever, and this is evident in its latest prosecutions. It's not often we see siblings on trial, but in a recent case of market abuse, a research analyst at a high-profile asset management company has been reprimanded for colluding with his sister, using his privileged access to email communications to organise a large-scale insider dealing operation. Using confidential information, both individuals traded 13 stocks between December 2019 and March 2021, generating a profit of nearly £1 million. Following the investigation, not only did the FCA uncover suspicious trading patterns, but the siblings were also exposed for conducting another large international money laundering scheme. This has resulted in their combined sentencing of 11 years of imprisonment. Summarising the case, the FCA set out clear intent to continue the fight against financial crime, using forceful action against those undermining market integrity. We've seen multiple examples of the FCA unleashing its wrath to prevent market abuse, and it's not stopping at insider trading. The regulator is charging 2 other individuals for carrying out a crypto fraud scheme where the fraudsters cold-called victims and sold them fake investments in cryptocurrency. This case saw 65 investors defrauded of over £1.5 million. The 2 are now facing a potential combined prison sentence of 12 years. If we cast our minds all the way back to April, FCA Joint Executive Director of Enforcement and Market Oversight, Therese Chambers, delivered a speech around the regulator's 3 Ps approach to combating market abuse. These cases are a direct example of these Ps in action. The FCA is being predictable, remaining transparent about its decision-making, producing proportionate and tailored actions to meet the circumstance, and acting purposefully in addressing the most significant risks to the market. Regulators worldwide are taking an increasingly hardline stance on financial crime, and the FCA is no exception. Firms must keep their eyes open for every possible sign of risk and implement the right technology and compliance controls to mitigate, detect, and deter financial crime. Because getting it wrong on market abuse can result in the 4th P, prison. Join us next time for another Regulatory Wrap.